we do have a ton of dividend investors on the M1 platform, and they're always looking for advanced insights and guidance and perspective on the overall performance of their dividends. And so some of it is just people are asking for it, and we're trying to provide what people want on the overall M1 platform. Dividend investing is here for all of time. It's a major component of how the investment that you make returns cash to the owner of that investment.
My name is Jake. Welcome to the channel. I had the opportunity to have a conversation with M1's founder and CEO, Brian Barnes. We discussed Brian's background and the topics of financial independence, how M1 protects your money, and the new dividend tracker and drip coming to M1. You will find the timestamps to our conversation in the description below. This video was not sponsored by M1, but rather made in collaboration with M1. Brian, thank you so much for joining me today.
Yeah, thanks for having me.
I would love to learn a little bit more about you personally, about your background. If you kind of just briefly introduce yourself, who is Brian Barnes?
Yep, so gave my name. I'm the founder and CEO of M1. I'm guessing the audience will be familiar with the platform, but personal finance platform combines digital investing, digital brokerage, digital banking into one ecosystem. Started the company almost 9 years ago now. So been at it a decent amount of time. Sort of took us a year and a half to build the product and launch it, get it into the public, and then just been continuing to develop new features and functionality over time. And then background was just personal finance geek from a young age. Got access to Brokerage Account, loved the idea of trying to figure out what a company's worth, put money behind it, started to read all the books about it, watch all the YouTube videos and the like. And so that's the probably more pertinent background. And then, had a little bit of a finance and tech background prior to starting M1.
Great. And so when we think about, 9 years ago, when I think about the options for brokerages, you had Robinhood that just recently came out. You had, the Scottrades, the Ameritrades of the world. What inspired you to combine tech and finance and create or to start M1?
I got a brokerage account when I was, call it 10 years old. And so, call it late 90s, early 2000s was sort of my first foray into money management. And so we had the digitization and the online brokerage and banking. So that wasn't new, but you really looked at that, like that sort of came online in the 80s, 90s, early 2000s. And by the time that I started M1 in 2015, the products looked identical. They had not changed in the prior 15 years of money management. It was an outdated interface, do all the work, click a button. At the time, it was, get hit with a $10, $15 per trade commission. Some of the more discount brokers might have dropped down to $5, but it was a, fairly clunky, costly experience. And, it required you to do all the work, but, made it easier where you didn't have to call someone on the phone to place the trades. We had two versions of fintechs sort of coming out. One was the pure robo-advisors. And so your Wealthfronts, your Betterments, and they were saying, I think of them more as automating the advisor and why they have the robo-advisor name as opposed to sitting down and talking to someone for an hour and charting out your plan. They would ask you a handful of questions. They would score you 0 to 10 on a risk tolerance, say you're a 7, and give you an ETF portfolio to choose that. And then on the other side of the world, you had Robinhood, which was we're going to just do the online brokerage and we're going to make the design a hell of a lot better and we're going to provide free trading. And so, sort of combined that. And I do think it was just a pure design and cost sort of difference versus what you had in the ecosystem. To me, M1 sort of fit that middle ground of, my cost is absolutely a component of investing, and we want to tamp down costs as much as possible. And so that's why M1 was free and didn't charge for investing and monetized in other ways. But there was this general blend of, me as an individual investor, I knew what I wanted to own. There was a portfolio that I wanted to maintain. The difficulty is I had a little bit of extra cash every 2 weeks with my paycheck. And it was the annoyance of the manual processes that were involved in putting that to work. And the idea that the money never summed up, quite well to put into shares. That, if the second that you wanted to do, split it across 10 securities, 10 times $10 a trade, $100, like that's a very expensive proposition to put, more money to work. And so M1 was trying to find this middle ground where we took a lot of the automation of the robo-advisor, said, you can treat this somewhat like a checking account or savings account where you just put money in and take money out. And that is your mechanism. But where that money goes, you have as much control as you feel comfortable having. So if you want that passive ETF portfolio, that is one way to invest. We'll support that. But if you actually want to have choice and invest in individual names or tilt to different various sectors or industries or the like, you also have that affordance as well. And so that was really the genesis, is providing the automation that was coming with the full choice and then bringing it forward in a low cost, well-designed platform.
I think that's absolutely right. When I think back on my own experience going from more of these, legacy brokerages where you had to buy full shares, when I discovered that I could buy fractional shares in M1, I was just, at first I was like, is this even real? Is this like, I still remember saying this, is this a scam? Like, how is this even possible? Because before that, it was unheard of. And, as you describe it, where you're just, sending over maybe 30, 40, 50 bucks left over that you have in your paycheck and spreading it across your portfolio was a game changer for me. So I'm glad that you highlighted that, because that was something that was really important to me. And, when we look back, since you've started M1 in these last 9 years, we've seen this digital transformation in many different ways, in many different sectors. What do you think has been the biggest change to how we as retail investors invest today compared to not just 9 years ago?
It's a great question. I think the tools are significantly better and they're less expensive. And, I actually think that that's the general trend of progress and innovation, is what, used to be only for the ultra affluent, ultra rich, very expensive, and maybe required a whole bunch of, a team to support it. Just over time, as you innovate, the costs come down, the experience gets better, it opens it up to more people. And I think that has been true in finance really for the last 100 years. That, 100 years ago, it was only for the ultra affluent. Then, your Fidelities and Schwab opened it up and said, hey, we'll provide that, but, lower the cost to, at one point, 30 bucks a trade, then 15 bucks a trade, then 10 bucks a trade, now free. And I do think, right now we're moving into a realm where everybody gets a hyper personalized portfolio, a plan, a system. And so it really does move into the person with $100,000 to their name, $250,000 to their name, gets sort of the same financial services that someone who had to have $50 million to their name got 50 years ago or 100 years ago. And so that really is the long arc of progression and innovation in the space. And so, I think if we look at what people have today, is the apps are incredibly simple to use. They're very elegant in the design. They allow you to do very complex things in a very simple manner. And then they're low cost associated with that. And so the platforms as a whole have just gotten monumentally better over time. And truthfully, I think the trend's going to continue, that there's a lot of interesting things on the horizon that the next 5-10 years, the platforms will just continue to get better and better.
I think when looking at it, all the apps that I have on my phone, I think back in 2007, before the iPhone, I had my little flip phone. And when the iPhone came out, I was like, why do I even need this? And then once I got the iPhone in my hand and was using it, it's like, okay, I can never go back. This changes everything. And it kind of feels like we've seen that here in finance, where I'm doing trades or investing for my future on my phone and doing everything from this little device, where it would have been unthinkable to do that just 10 years ago or 20 years ago. So, and it's exciting to hear from someone like you who's in the space saying, hey guys, it's only going to get better. So that's promising.
We were talking about fractional shares. There was a period in time where you could only buy things in even lots, which is 100 shares at a time. And then it was, monumental when you could move from 100 shares to 62 shares. And, that was a breakthrough of, hey, you don't have to do it in these big quantums of money. You can break it into smaller quantums of money. And then it, moved down to a single share, and then it moves to fractional shares. And so you move to a realm where it's any dollar amount in any security that you want. And that's, generally how I think it should be. We used to quote things in like 16ths of dollars or eighths of dollars and stuff like that. And, we just moved to the decimal system, and it's like, that makes a lot more sense. And that people, it's a progression in the right way. I think in terms of what's interesting in the future, the best that personal finance has to offer is a client relationship manager that interacts with you, and then a team behind that person, optimizing every aspect of your finances and sort of saying, I know you as a individual. I know how you make money. I know how you spend money. I know what your priorities are in life. I know what your risk tolerance is, and really being able to devise a hyper personalized custom plan associated with you. And then using software to automate the hell out of that, trying to say, anytime a dollar comes into the platform, let's use it according to that plan. And I think we're just moving more and more into that realm. And that's what M1's trying to do. And with a lot of the advents, you're going to get into interesting interaction patterns where it's not, typing everything in spreadsheets and, even the app UI, but having verbal conversations, much like you would with a financial advisor. So, I think the future's bright, and I think people today are going to get access to something, John D. Rockefeller would have only dreamed about having at some period in time.
I love it. Something that was only reserved for the ultra rich is now being made available for just your average person. So great. Well, with that, I guess, the last thing that I wanted to ask in terms of, your background and you personally, even the greatest investors of our time, like, people think about Warren Buffett, has had a role model or a teacher that he's looked up to, for example, Benjamin Graham. With this in mind, this is maybe more on the personal side, but would you mind sharing who are your financial role models? Who do you look up to in the finance space?
Well, so you already mentioned one. So Warren Buffett is definitely high on my list. And I don't know, came of age in investing as YouTube sort of skyrocketed, and everybody's talks became instantly available. And so to me, you get access to the best minds in investing have either given very prolific talks, whether they're talking in front of an audience for an hour, or you're at your Berkshire Hathaway meeting and you get Warren and Charlie talking for 5-6 hours on end, or they write books associated with it. And so you name your prestigious investor, have probably consumed it. Love starting with Graham and Dodd, then Warren Buffett and Charlie Munger. Love the two of them. You talk about like Peter Lynch and the Magellan Fund. I worked a little bit at Value Act Capital, which is a hedge fund, and Jeff Ubben was the sort of value investing guru at that time. Read everything from Bill Ackman, Aswath Damodaran is a valuation professor that has written very interesting books and given interesting. He provides all his lectures online. So I wish I could point to. There's definitely not one singular person took me under their wing, but it was more of the brightest minds in investing have made a lot of content available, and I find a lot of joy in just hearing their perspectives on various items.
Great. Okay, so I wanted to shift gears here a little bit and talk a little bit about financial independence. So on my channel, I recently reached what is called financial independence, retire early, and it's been something that I've been very passionate about. And, my experience, M1 has been perfect for those pursuing financial independence. And whether they're pursuing true FIRE or something in between, I listened to a podcast in the past where you talked about, not necessarily creating M1 with the intent to help people to reach financial independence, but it just naturally became a byproduct of that. So did I understand this correctly? Is that what happened?
I may have said something related to that. Maybe my more nuanced perspective there is I love the financial independence style of things. The retire early, I think, is more of a personal choice of once you achieve financial independence, it's a little bit more of do what you want to do. And, for some people that can be continuing to work in a area that they're hyper passionate about and wanting to contribute in a meaningful way. And maybe you just want to keep putting more points on the scoreboard for quantitative reasons. Maybe you want to make more money to have a bigger impact in the world. Like many reasons to do that. But the financial independence, I think, is absolutely massive. That it's a little bit abstract, but money is just this numbering system that we use to score things, and it's how you trade your time and your energy and your creativity so that you get these dollars so that you can go buy groceries and housing and, like whatever it may be. Money is just this hyper abstract quantification of the choices that you're making in life. And to me, financial independence is you have enough of it to do exactly what you want to do. And I think is an incredibly powerful aspect of you're no longer needing to do something solely for the benefit of paying the bills, paying for the basics, getting housing, getting food, providing for your kids, your family. And it really does move into this realm where you have enough to navigate the world exactly the way that you want to navigate the world. And to me, that is the pinnacle and the peak that people should I think strive for. It opens up possibilities that is very difficult until you reach it. And so M1 is like we say that's very correlated to your wealth, and so we just want to help you increase your wealth. Like the more wealth that you have, the more affordance that gives you. And so across every domain in personal finance, we're trying to create a product that satisfies that exact need, but then ultimately helps increase your wealth over time to give you that affordance and options in your life.
When looking at financial independence to retire early, I've seen M1 pop up more and more in the FIRE community. When I read different blog posts or watch different creators on YouTube who I listen and follow, they talk a lot about M1. Why do you think so many people pursuing FIRE or financial independence, right? The retire early part is optional. Why do you think they like using M1 so much?
I think it just generally matches with that ethos of people have different thresholds where they have financial independence, but at some level it is, broadly speaking, semi-correlated to wealth, and different people have different wealth expectations, wants, needs, preferences, and the like. And M1's ethos is we're trying to help you increase your wealth. The other thing that we're doing is we have a long-term perspective that when people think about financial independence or retiring early and not having to go to work for a paycheck, they're thinking about it over their lifetime. And if they're in their 20s and they live to 80, that's the next 60 years. And so it is an incredibly long period of time where it's not, I'm trying to do this tomorrow or I'm trying next Thursday to be great. It's, I'm trying for my life to be great. And for us, we think of personal finance and financial well-being similar to health or, overall physical well-being. And it's, I use the analogy probably too much and get people annoyed at it, but it's, you don't get healthy by eating a good meal once. You don't get, unhealthy by eating a bad meal once. You get outcomes by doing the right things consistently over incredibly long periods of time. Same thing with working out. You don't get fit by exercising once. You don't get, you take a day off. Like that's not why you're unhealthy or not the fitness level that you want to be. And so I think we take that perspective of, if you're managing for financial independence and you're 40 years old, you're thinking about the next 40 to 60 years of your life. And, you're really trying to say, I want to set things up such that I am doing the prudent things over and over again for incredibly long periods of time, such that I can manage my financial picture over incredibly long periods of time. And so I think like that is the way that M1 has been built. We don't prioritize short-term trading. We think that that's sort of noise in the market. We don't opt for, hyper leveraged options and, weekly calls and stuff where people are trying to get rich quick. We sort of take a pragmatic long-term approach of in each one of our, like in our earn vertical, you want to get paid the most money you can on your deposits. We pay top of market at 5%. On invest, you want to be in a diversified portfolio of things that you know and understand. You want to systematically contribute to it. You want to keep costs low, and you want to rebalance with some occasion. That's exactly what the platform's made for. On spend, we anytime you spend money, we want the most cash back as possible. We want it to be as easy as possible. That's our credit card product. And then borrowing is this strategic tool that in big use, it's definitely detrimental, but borrowing provides a fantastic toolkit in someone's overall arsenal. And so for us, we're trying to say, if you want to borrow money, we're going to try to make the cost as low as possible, the terms as most flexible as possible, provide you access to liquidity that you don't have to reserve a ton of cash for. And so in all of these domains, we're just taking this is prudent long-term financial management. How can you set up a system? How can you set up a process? And how can you automate as much as that, so you don't have to keep remaking the same good decision over and over again?
Yeah, I love that you highlight that with the with M1 Borrow. In 2021, instead of selling out of my positions, I leveraged my portfolio, used M1 Borrow to actually put a down payment on a house. So I mean, it can be hugely, a huge benefit for just your average person who is not an ultra high with, net worth person. So
And then, going back to what was once available to the ultra affluent, you're ultra wealthy. The bank's going to give you a big line of credit at a low rate and say, do whatever you want with it. And we're just trying to provide that same service. And if you look at that, what that very likely allowed you to do is defer paying taxes on cap gains. And so, it is one of these things like without that, you likely would have sold securities, you would have had less invested in the market, and you would have had a big, tax bill associated with it. And so, that's where it's a very powerful strategic tool to then help you have more money over a long period of time by deferring taxes on this appreciated asset that you may have.
I've read many articles that financial literacy is becoming a more mainstream topic. As the younger generation continues to start investing earlier with their parents, than their parents, despite the increase in financial literacy. I read an article from CNBC earlier this year that surveyed about 1,000 people, saying that 65% of Gen Z millennials think that the stock market is a great place to build wealth, but only 61% said that they were actually saving for retirement each month. So I'd love to hear your thoughts. What's your opinion on why roughly 40% of Gen Z and millennials are not actually investing for their future? And, kind of piggybacking off of what you just said, how can M1 help them?
There's two aspects. So some people are in a tough position financially where, they need all the financial resources that they currently have to pay for their life now. And, they need to increase their income. They need to budgeting tools. They need access to credit. And, there's a sort of short-term need that they may have where they just don't have the luxury or affordance of excess that they can put to work. And so, that is absolutely one component of the situation. The other is, investing is setting aside something now in hopes for more in the future. And so it is massive delayed gratification or, and there are times when like shiny objects are more attractive now than thinking about you 20 years from now. And it is the same thing of people typically know what the right option is. And, it is long-term investing. It is keeping costs low. It is, keeping a diversified portfolio. It is not high-frequency trading. It is not options trading. It is not, trying your weird alternative crypto coin, trying to hit the lotto. Better path is it's some sense the harder path because it takes longer. And even going back to Warren Buffett, it's he has the quote, "Nobody wants to get rich slowly," and investing using the traditional methods is getting rich slowly. And so, I think it's hard for people to think long-term, act long-term, not have short-term noise come to them. And so, those are the two reasons. Either they can't, or it's just very difficult to be long-term oriented. In terms of M1 helping in that, I think lowering the barriers is massive. So, not requiring giant sums of money, but modest sums of money, and being able to contribute sums of money over periods in time and say, $100 with your paycheck, $500 with your paycheck, like that makes it much easier to do than saying, unless you have $500,000, like don't talk to us, which some finance firms do, and some have way higher limits than that. The other is making it engaging and enjoyable enough that you participate and you care, but not so engaging that it becomes a casino where you're risking all your money day in, day out, and riding a roller coaster minute by minute. And so I do think people behave better when they participate in something, they act in something, they know why they've done something, and that is also a big component of M1 of creating your sort of like personal thumbprint on your portfolio of this is what you have selected to invest in because it matches your perspective, your risk tolerance, your horizon, your what you think is going to happen in the world, and that just leads to a buy-in that you don't get when you may not get when it's a very hyper passive portfolio or handing it off to a mutual fund or deferring to a financial advisor and say, you make all the decisions. I don't want to think about this.
I like what you said when it comes to making it engaging. And, something that comes to mind is not turning it into a casino, obviously, but maybe gamifying it, right? Like I think about the owner's reward card, right? When you go and you purchase something at Starbucks, you're getting rewards back for that purchase, and kind of like making it where it's like, hey, I'm doing this intentional. And, millennials and Gen Zers, I think we think a little bit differently than maybe older generations. And that's more a component of how we tick. And, it's just part of, those generations. So I guess, shifting gears here a little bit, I've been sharing my journey about financial independence on YouTube for about 5 years and talking a lot about M1. And the question that I get from people the most when talking about M1 is M1 safe? And so with that in mind, I was hoping you could share how M1 keeps our money safe.
We do an incredible amount to keep the money safe. And so we'll bucket it into broader categories, but, probably it would take many hours of time. We don't have to go through everything that we do. It does start with, we are a regulated financial institution. And so on the earn account, which is the cash account, the invest brokerage account, and then brokerage margin, that is all provided through a registered broker-dealer. We're overseen by FINRA, which is a self-regulatory organization, and then the SEC sort of enforces rules on FINRA to oversee the broker-dealers. And, there's, we adhere to all like very strict rules and regulations associated with that. We get audited with like hyper frequency, both independent auditors as well as the regulators coming in, and we're even one of the highest bars of sort of regulated entities that it sort of breaks down in the brokerage realm to, you can be an introducing broker dealer or a clearing broker dealer, and the clearing broker dealer means you actually hold in custody the assets. There are about 5,000 introducing broker dealers and only about 200 clearing broker dealers, and we are one of the 200. And so we are held to a significantly higher standard than most of the other broker dealers in the realm, and it requires, significant capital allocation, equity, and the like, and all of that makes it so that the U.S. wants people to have faith in the financial ecosystem. And so they hold people to high standards, and then they provide insurance on top of that. And so everything in the brokerage realm is provided by Civic. And then on the banking side, we work with nationally chartered bank or, registered banking institutions, one of which I actually purchased a handful of years ago. And so we, again, very, very high bar in terms of expectations and regulations that are needed there, and adhere to all of them. And then there's, the regulatory authorities as well as FDIC insurance, and we partner with other banks to increase that FDIC insurance amount. We have one element that's just the regulated entities and the insurance component. The others is just the practices that we do. And I would say for the biggest thing, just being a digital first firm, is security. And so, anything related to information security, cybersecurity, M1, we actually probably benefited by being a more recently established firm where we could employ modern best practices from the get-go versus augmenting systems that were developed in the 50s, 60s, 70s, 80s and trying to say, like, let's slap on security after the fact. And so I would say the diligence at which we look at all infosec related items is incredibly high as well. And again, audited, and you'll have to prove that that's the case as well. And then broadly speaking, M1's raised a lot of money, and we keep a healthy balance sheet to sort of, we want to be a prudently managed firm in all times, good and bad. We take the stewardship of people's money incredibly seriously. And so, handful of reasons, and then of specifics with regulations and cybersecurity. And then I do just think the ethos and culture of the firm, where I will never claim that we care as much about your money as you care about the money. I think people, but we try to come close. I think we view it as like a privilege and an honor that people are trusting us with their hard-earned cash, and we know what it means to them, and we're trying to help them in their financial journey, and know that encompasses a lot of things in terms of keeping that people's net worth safe.
Great. So I have two examples of questions. That's perfect. That's great to hear. And I mean, that's another reason why I only invest with US based brokerages. There's a lot of overseas brokerages out there and just they're not held to the same standard as US based firms. And so I'm glad that you pointed that out with the regulation. There's two cases that, two questions that I always see pop up. You have the FDIC insurance that's focused on cash, and then you have the SIP insurance, which is focused more on the investment itself. So two questions. The first one is, what is the difference in terms of the cash held in the earned account, the high yield savings account, and the cash held in your brokerage account? Are they covered under the same FDIC insurance, or are they considered two different accounts? How do those two accounts work?
Yeah, so it's a little bit complicated, and so I'll do my best to parse it. So the brokerage realm is overseen by SIPC, and so that is the sort of rules under SIPC is if a brokerage were to fail and then they go in and see that the brokerage has done anything like any malfeasance or cooking the books and there weren't funds there, SIPC would come in and cover up to $500,000, of which half of it can be cash, $250,000 can be cash. So that's one side of the world. And then the FDIC is a very similar thing in the banking realm, where if a bank were ever to go bankrupt or fail, every sort of unique account type or individual holder, and this gets a little weird, is insured up to $250,000. And so, if you have a $250,000 account, that's protected by FDIC. If you have a account with your spouse and that's a joint account, it sort of tacks on and it goes up to $500,000. And so there's some nuances and differences based on the ownership structure and account structure and the like. What M1 does, so we have both forms of insurance, and it really does matter, is the money held in the brokerage or is it held in a federally insured depository institution or a bank? And where the things get complicated is there are times that money is held in the brokerage that we then move to a bank. And so we sort of like move it out of the brokerage system into the banking system to provide the FDIC coverage. And so it's to say, like, we sort of have these umbrellas, and where the accounts are matter. In the earn account, we actually have two forms of earn accounts. So there's a high yield savings account, 100% FDIC insurance, and we partner with a whole bunch of other partner banks to increase that FDIC insurance amount quite dramatically. And we're sort of placing the fund. If you were to deposit $4 million in cash, we'll go place those funds in a bunch of different banks held in your name so that you have FDIC insurance over that total amount. If you have a cash account that's provided by the broker dealer, it's sort of protected under SIPC while the funds are in transit, but then we also do the deposit placement at banks. And so when it lands at the banks, it's covered by FDIC. And so you're provided by the insurance, but this is where I say it gets a little complicated. As the funds are in transit, SIPC; as the funds land at the bank, FDIC. Then, you get into the pure invest account, and people can hold cash in the invest account, and all the securities, the stocks, the ETFs, the cash is protected by SIPC there. And so, we do a lot to adhere to all the rules and regulations and make sure that it's covered and take it very seriously. But there are some weird nuances of where is this dollar at this period in time that may cause it to fall under different regimes.
Sure. That's great. That's great to hear. And it's great to hear that you guys are being so prudent when it comes to, the different account types and following, it sounds like you're doing above and beyond what's actually required of you. The other question that I had, you kind of touched on already, but I want to highlight it specifically because this question I get all the time. So, when we talk about the investments held in M1, right? Your Coca-Cola, your Dividend ETFs, your SHD, your Johnson & Johnson, if something were to happen, the unthinkable were to happen to M1 or any brokerage for that matter, not just unique to M1, will my Coca-Cola or Johnson & Johnson shares disappear if something were to unthinkable to happen to the brokerage, right? Would I still have ownership over those shares, or would it only be insured up to a certain amount? What would happen to my shares if I had $2 million in Coca-Cola in my brokerage?
I'm definitely not trying to provide a complicated answer to what ideally would be like a hyper straightforward answer. M1 works with two clearing firms. One is with Apex, and then one is with our own. all these clearing firms, of which there are about 200, have a sort of centralized book of record at the DTC. And so, if we own 10 million shares of company A on behalf of all of our customers, it's sort of at the DTC, it says M1 Finance owns that. And then we're responsible for, this amount is responsible to this person, to that person. And we have massive daily reconciliation efforts of every single share is accounted for. And if it's not, it's called a trade break. Wild things. It is, if you get out of reconciliation at any period in time, it's bad, and people will know about it and identify it. There are times where your specific shares may be on loan for a certain reason. And so there's a fully paid for system where we pay you 10% of some income that we generate, and it's how we support the business. And so that could be on loan. And so, at that point, it's borrowed by someone else. Or if people take out margin balances, we have the capacity to loan those securities out as well to generate the cash to provide the margin. So there are weird times where money or the shares are with another party, but there's a ledgering system associated with it. If the brokerage were to fail, for whatever reason, they would sort of take the total pool of assets, and the ideal scenario, as the brokerage lost money, none of the customers did. And so all of the securities are held at the DTC, they're allocated to the individual customers, they are their shares, they are no one else's, and those get distributed accordingly. The only time that may happen is if the shares are out on loan, there's some complexity of calling those back, or if the brokerage was doing something illegal and cooking the books, not accounting for things correctly. And so, there are some nefarious actions that the broker dealer could potentially take, which is why they're heavily regulated, heavily audited, heavily scrutinized associated with it. If there were ever a shortfall in sort of the total accounts that people should own versus it, that's when it goes to Civic Insurance and it says, everyone who has under 500,000, you guys are taken care of. We'll give you that. Of the sort of residual that's remaining, anything that is short, we're going to sort of divvy up according. And then a lot of firms will provide incremental insurance on top of that and and we have that through Apex. And so it is this complicated version where, I wish I could say and then this is the compliance person. I wish I could say certainly there's no problem whatsoever. But there are weird esoteric times where the broker dealer would have to be doing something nefarious. There would have to be very poor reconciliation or not enough shares at the DTC, people cooking the books, and the broker dealer would have to collapse for that to happen. And you would have to do that all in the confines of being a heavily regulated, heavily scrutinized, proving reconciliation on a very frequent basis. And so it's, it's to, again, say it's not like it can't happen, but even when we saw Silicon Valley Bank go under, government steps in to set, and they won't always do this, but we as a country don't seem to like the threat of anybody losing money in US regulated institutions. And so we as a ecosystem, we as a country are very heavily incentivized to, have people have full faith and trust in all the institutions that they use and know that their money is theirs and it's safe and protected.
Okay, great. I think, the complexity that comes with this, there's so many different layers. It's not just but it isn't a simple yes or no kind of question. There's a lot more that comes to it. I guess, for peace of mind for somebody who's maybe brand new to investing and they don't understand the regulatory system and how everything else works, it's more based off of trust. And when, let's say, for example, someone has $1 million in their portfolio, they're not loaning out their shares. They turned off all of that. Does the brokerage own those shares or does the individual own those shares?
The individual owns those shares. Full stop, outright. Individual owns those shares. In the extent that a brokerage was doing something illegal, the person would have a claim against the brokerage for all of those shares because they 100% own $1 million and they have a claim against what the assets that the brokerage should be managing. The brokerage doesn't own those shares.
Okay, wonderful. Thank you so much. I think that's a lot of people who are hearing that are just like, okay, good. This makes sense.
The overly disclosing, and it is one of these like tough things. So it's a complicated system, and there's sort of only in these hyper horrible, nefarious actor situations does it come into play. But I'd say like the federal government, the systems we have in place, the brokerages themselves, and just the system, like it is your money. We are not, we have hardcore segregation. We're not allowed to touch it. Only if I don't want to say we, because we definitely don't do this. Only if a brokerage was breaking the law would any of this come into play.
We talked about what inspired you to start M1. We talked about how M1 is helping its users reach financial independence. And we talked about how M1 is keeping our money safe. Next, I wanted to talk about something really exciting. M1 has been great for dividend investors like myself, but it's about to get even better. I've had the privilege of working with your team on some new exciting features that are about to be rolled out in M1, those being a dividend tracker and dividend handling. I've had the opportunity to play around with these new features and would love to talk to you about them. M1 will be adding a dividend tracker to the platform. For those of you who have never used a dividend tracker, this is a tool to visualize your upcoming declared and estimated dividend income month over month. And as someone who is living off of his dividend portfolio, this is an absolute game changer for me personally. I'm curious, Brian, what led you and your team to roll out a new dividend tracker in M1?
Yeah, so I think it's broadly speaking twofold. One is we do have a ton of dividend investors on the M1 platform, and they're always looking for advanced insights and guidance and perspective on the overall performance of their dividends. And so some of it is just people are asking for it, and we're trying to provide what people want on the overall M1 platform. The second is just like the broader concept of dividends is a major component of everybody's financial returns. And so, your investment is truthful. You put money in and it's what you can pull out in cash over periods of time. And, that can happen in a handful of ways. You can either sell the security, or the company themselves or industry ETF can provide dividends and pay the owners some cash with some regularity associated with it. And so because it's just a huge component of someone's financial returns, we want to give as much insight into that as possible. And so you did break down the two aspects. One is giving people choice over where the dividend goes. And so right now, the only option is to sort of treat it all as a cash input into the portfolio, and then it gets taken up by the M1 algorithm and deployed. And so it effectively rebalances the portfolio, but that's one option. What other people can do is say, I want the dividend to be reinvested into the security from which it came, so sort of a DRIP, dividend reinvestment program, and say, that is part of my return of the security. I just want to continue to deploy it into that security. The other is to direct the cash towards something else. And so you can direct it to, just stay as cash. You can direct it to your earn account. You can direct it to pay your credit card bill, like whatever you want to do. And so it gives you a lot more flexibility in saying, this is how my investments are paying me. As they pay me, here's what I want to do with them. And a lot more, like a very easy, intuitive way to construct that. The second is what you mentioned on the sort of like forecasting, what's going to happen in the future, sort of based on what your portfolio looks like now, what people have declared, what they say that they're going to pay, and a little bit of estimate that, reliable dividend payers don't confirm like, hey, we are 100% with certainty going to pay you a year from now. But, we can take the big companies that have paid dividends for the last 40 years and say like, it's pretty likely that they're going to pay it a year from now. And so we're trying to give you as much insight into the future of when those cash payments are going to hit your account. And so it is trying to provide both the capability of when I get dividends, here's exactly what I want to do with them, and then when should I expect or receive dividends, and being able to track that both historically and into the future.
Giving people the flexibility and control to manage how they divvy up their dividends, because especially if you're a dividend investor, it's part of the total return, and it's on your mind how you're going to manage where those funds are going. And a lot of people, they ask the question, hey, Jake, should I reinvest back into the stock itself, or should I use the dynamic rebalancing, through M1? And, can I do that with just one stock? Should I do it with my high yielders, my dividend growth stocks? And so giving control giving back the control to the user is going to be such a welcome change for users who have just been used to just, setting it on, auto balance. Have you, was this directly, provided from feedback from your team? Like where did the idea come having the dividend handling?
M1 starts from a place that we are trying to let you do complex things simply. That it's, somewhat easy to let you do complex things in a complex manner, and it's somewhat easy to let you do simple things in a simple manner. Where the magic comes in is, hey, if I were to do this all by myself and sort of manually push every money to every specific location that I want, it would take me a lot of time. And so like, how can M1 just say, generally tell us what you're trying to do, tell us what you want to do, we will make that happen, and we'll do it in a very elegant, easy form. And so, that's the magic, I think, of software. Can you do complex things simply? And, I think for us, that is by standard having a default option. And so our default for the entire time was just treat any dividend payment as cash. And, it doesn't matter if you deposit $100, you get paid $100 in dividend, treat them identical. And that is something that is still fully capable. And then we take over the automation from there. I think to your point, people don't always have I want the default option, or I want to do something different. And for us, it's can we allow for that in a very easy, intuitive, simple manner? And it takes time to do, and so that's why it wasn't available from the get-go. And so I think it's always in our ethos to allow people to do manual interventions or set up their automated rules that aren't the perfect like allow them to tune the dials more personally as they see fit. But we also don't want it to be a hyper cumbersome process to do that. And so, as the feature gets rolling out, it's, you can either say, do the default option as if it's happened in the past, reinvest all the dividends into the security from which they came, reinvest certain dividends in, if I have 10 dividend paying stocks and I want 5 to go back into the dividends, like check these 5. If I want all the cash payments to go into this other account, do that. And so I think we've queued up the system so that people can say, no, I want a little bit more control. I want a little bit more influence. I want to tune the dials to my unique perspective or wants. But then it's also, again, like, we're not going to require you to do it every single time you get a dividend payment. Like, you don't have to get an alert and go in and do something. You can set up rules of, this is how I generally want them managed, and just do that until I come and tell you differently.
And it feels like this is the natural evolution of the smart transfers, right? Being able to control and automate where your money's going, where it's coming from, where it's going. I've had the opportunity to test this on desktop. I'm assuming this is coming to mobile as well.
We will be developing it on mobile. Mobile's going to lag a little bit, and I don't want to make promises. My engineering team will come yell at me later, but it is 100% coming to web and will be released very shortly. It is getting worked on by Dividends, and then truthfully, customer feedback of whether they enjoy and like the feature set will also dictate how quickly it comes out on mobile.
Great to hear. Well, for most people, when they hear, someone's a dividend investor, they usually have a picture of their grandpa in mind, right? Investing into AT&T or Verizon or something. I think that that's changing quickly, and dividend investing is being more widely adopted by younger investors. We are seeing more tech companies like Meta, Salesforce, and even Google now paying a dividend. Do you think now that these cool tech companies paying a dividend, that it will attract more people to start focusing on dividend investing?
Absolutely could. That there are, an investment is worth the cash that you can take out of it over periods in time, and that is either you're getting paid cash or you are selling some of the security. So there's sort of like two ways that you take cash out, and if you think of non-securities related thing, like if you own a rental property, it's paying you cash. Like it's very hard to sell 10% of your rental property or 20% of your rental property. It's sort of an all or nothing. And, that is a purely dividend paying stock, stock in quotes, versus, some more liquid trading securities where you can sell a portion of your holdings. But so dividend investing is here for all of time. It's a major component of how the investment that you make returns cash to the owner of that investment. And then I think that dividend investors, there's many reasons why they would want to do it, to generate cash flow. There's also in the investment perspective, the discipline of a company saying, we honestly generate too much cash and we don't know, it's not even don't know, but we don't have as many good uses for it as we did in the past. And rather than us, continuing to deploy it and, we're already attacking our best ideas 1 through 9. And, instead of going 10 through 20, we're just going to give it back to you. And the financial discipline of saying we, like the company themselves we're putting all the cash that we possibly can to our best performing ideas, and we still have extra. The best thing that we can do with that is return it to the shareholders so that they can decide what to do with this extra money that their ownership is producing. I think it's a very strong signaling aspect to the individual investor. And so, there's a whole host of reasons why, from cash flow generation to, there might be a psychology aspect of just seeing your investments pay out versus relying on the capital appreciation. There may be for me to make this investment, I want this company to be prudent with their own finances, and this is a signaling and indication that they are. All host of reasons I think are very viable reasons to invest in dividends, and the fact that the biggest, most successful companies are getting more into it. Like I think it would be shocking to not have more people be interested or intrigued of why is this company paying a dividend, and that should be some evaluation in when you're making the investment to begin with.
I completely agree. I think, I can speak for most dividend investors using M1 when I say that, the dividend tracker and the dividend handling are going to be welcomed with open arms. Are there any other insights or teasers you could maybe share with with us in terms of future dividend investing features that you may be having on your roadmap for the future?
Man, would I love to. Again, I don't want to make my product team, I already overpromise on their behalf. And so, just need to be like a little bit cautious with that. What I would say, like the building something to be production ready and to be used by hundreds of thousands of people and not have issues or mistakes and frustrations. Everything that we bring to market has to clear a very high bar and be bulletized. And so it just takes a decent amount of time to develop these. And so we always have 100 ideas for everyone that we can pursue. And so from a dividend perspective, we have no shortage of ideas. Truthfully, the world's best thing is to get feedback from our customer base of what is helpful. What are you looking to see? What, are we thinking about this in the right way? This is our iteration of how we think it can be helpful and valuable to you. Did we get it right? Did we, screw something up? Could we have done it better in this way? And so we're always in search of ideas. And so I'd say, reaching out and, whether it's one of our social media properties, customer support, talking on the phone with us, we have customer panels, all of that helps us drive our roadmap and make decisions of how can we make this platform the best that we possibly can for our client base.
Fair enough. Well, for now, we're just going to have to look forward to getting our hands on the dividend tracker and dividend handling features in M1. But with that, Brian, thank you for joining with me today to talk about how M1 is helping people achieve financial independence and the new dividend features coming out here very soon.
Thanks for having me. Had a blast chatting.